morning, distinguished ladies and gentlemen. Welcome to the 8th edition of CRC Credit Bureau's webinar series, Due and Credit. CRC launched Due and Credit in 2019 as part of our Sustainability and Corporate Social Responsibility Initiative. It is a free workshop and webinar to educate Nigerians generally on the issues of credit and its impact on their financial lives. Today's webinar is themed Impact of Microlenders on Access to Credit for Consumers and MSMEs in Nigeria, and we're honored to have you with us. My name is Peggy Chukwumawosu. Please be advised that we are recording this event and also streaming live on Facebook and YouTube. The presentations and recordings will be made available at the end of this webinar. Kindly use the question and answer box for your questions. Questions can also be shared with us via our various other channels. Today promises to be another impactful session. We're honored today to have the Director, Other Financial Institutions Departments of Central Bank of Nigeria, ably represented by Mr. Jackson. We're also honored to have Mr. Yila Yusuf, the Director, Development Finance Department of the Central Bank of Nigeria, also ably represented by Mrs. Jennifer Agoli. It's my honor to also introduce to you today our speakers. Our keynote speaker for today is Dr. Kazim. He's the Managing Director of Baobab Microfinance Bank Nigeria Limited, a subsidiary of Baobab Group, with headquarters in Paris. He was among the top 100 CEOs responsible for the growth of the Nigerian economy in Forbes International magazine, and has won several awards in his capacity as the CEO of Baobab Nigeria. He has led the bank to many laurels, including Business Day MSME Microfinance Bank of the Year 2021, 50 Most Impactful and Award-Winning CEO 2002 by the Guardian newspaper, Financial Services Personality of the Year 2002 by African Leadership Awards, West Africa, and also West Africa's Most Outstanding Microlending Service 2022, and Africa's Most Innovative Money Lending Brand of the Year 2020. Dr. Kazim holds a Bachelor of Science degree and an MBA in Finance from the prestigious Ahmadu Bello University, Zaria, Nigeria, a master's degree in Financial Economics from the University of Abuja, also in Nigeria, as well as a doctorate in Management Finance with a specialty in microfinance at the Walden University of the United States of America in July 2018. He's a professional microfinance and SME business development expert, a certified microfinance banker, a chartered accountant, associate member of the Association of Cost and Executive Accountants of Nigeria, Institute of Credit Administrators of Nigeria, and Institute of Capital Market Registrars, and he has attended various courses both locally and internationally, including the renowned Microfinance Institute Turin, which is located in Italy in 2012. It's also my honor to introduce Mr. Taiwo Joda. He's an accomplished business leader with over 27 years of vast, extensive experience in leading teams, strategy formation, banking, and managing digital transformation programs to achieve financial inclusion objectives in bank and non-bank financial institutions, including arbitrage finance and investment. Kenneth Michael and Company Financial Advisors, FSB International Bank, Equatorial Trust Bank, Diamond Bank, Fidelity Bank, and currently ASEAN Microfinance Bank. He is certified by the John Maxwell team as a people trainer, coach, mentor, and speaker. He's currently the managing director of ASEAN Microfinance Bank. He holds a Bachelor of Science degree in finance and banking from the University of Lagos and a master's degree in finance and banking from the same university. He's a member of the Governing Council, FinTech Association of Nigeria, and NASPA Working Group, the National Economic Summit Group, NESG. He's currently the chairman, National Association of Microfinance Bank, Lagos chapter. He has attended several top management programs, both locally and internationally, including Lagos Business School, Nigeria, INSEAD, France, and Euromoney in both UK and Singapore. He has excellent leadership skills and continually mentors young professionals. He has won several awards and several recognitions, including the Leadership Financial Inclusion Award. It is also my honor to introduce our host and moderator for the day, Dr. Tunde Popola. He's a Nigerian banker, accountant, economist, entrepreneur, and business executive. He has over 30 years cumulative work experience spanning from the public and the private sectors of the Nigerian economy. He became the Group Managing Director, CEO of CRC Credit Bureau effective January 1st, 2022. Prior to this, he has been the Managing Director, CEO of CRC since its establishment in 2008. He was also the pioneer CEO of the Abuja Enterprise Agency. He has also attended executive education programs at the Harvard Kennedy School of Government and the Harvard Business School, the International Management and Development, Switzerland, and the Kellogg School of Management. He's a fellow of the Institute of Chartered Accountants of Nigeria and several other professional bodies. He holds several awards and recognitions, especially for his role in entrepreneurship, business management, finance, and youth empowerment. He is also a proud recipient of the Special Ministerial Recognition and Commendation for his innovation and promotion of youth enterprise in FCT. You will agree with me, ladies and gentlemen, that we would have a very, very impactful session. You're welcome once again. Thank you very much. Dr. Tunde Popola, sir.
Thank you very much, Peggy, for the kind introduction. And I want to use the opportunity once again to welcome everyone to this webinar, webinar 8.0. Particularly, we should thank our speakers today, the keynote speaker, Dr. Kazim, and our other second speaker, Mr. Joda. Let me also recognize the presence of the two major departments of the Central Bank of Nigeria that have to do with micro lending with us in our midst. Mr. Yila Yusuf, the Director of Development Finance, is represented by Ms. Jennifer Agboli, and Mr. Jackson will be representing Mrs. Inkiru Asiegu, the Director of Other Financial Institutions Supervision Department. We are so grateful to have you. We're also so grateful to have everyone. The people are still joining us. On my screen now, I can see over 900 people joined already. The last webinar we had about 6,000 people participated in the webinar. And I don't see this today's record being lower because of the subject matter that we want to discuss. And so it's my pleasure to welcome you and to just provide some level of introduction to the topic of the conversation we are going to be having today. Thereafter, I will moderate the session where the speakers will speak. The way we are going to go is that I will make a few slides of presentation to talk about CRC, who we are, and introduce the subject that we are trying to discuss today, which is impact of micro lenders on access to credit for consumers and small businesses. Thereafter, we will then have the keynote speaker deliver his speech, and Mr. Joda will also speak. Before we open it to the public, we will want the central bank representatives to also briefly tell us some level of goodwill messages where they will tell us the efforts of the regulators and then the intervention funds that relates to micro lending. I guess they will be speaking to those two things. Thereafter, we'll then open the floor for conversation and to respond to questions and answers. When you have any question, please post them in the Q&A like Peggy has said. Thank you very much. So we are discussing impact of micro lenders and access to finance. We all know finance is very important. We know credit is a major source of finance. There's no doubt that it's either you save your own money or you borrow to do whatever you want to do, either for business or for personal consumption. So the issue of credit is ever, very important as a very strong, leg of access to credit, both for businesses and for individuals. And you will realize that access to credit, the modality for getting credit, the business model, is changing so radically all over the world. And so today we decided that, okay, let's focus on micro lending and let's see why this is so important for small businesses. And so at the end of this webinar, we want to be able to have made some level of, contribution for our participants to understand and know the contribution of micro lenders to access to credit in Nigeria, all the efforts, the activities that are going on in micro lending space, so that any of them that want to, catch into it will know it. And then the micro lenders themselves will share with us their experience and how people can really access credit through them, the challenges they face, and how people can overcome it. We also probably listen to other participants to also let us see the pain points you see in having access to micro lenders generally in the country. And of course, we then will talk around how credit bureaus help micro lending services in Nigeria. It's very important because we are at the junction of really getting the lenders generally to have access to information that will help them to really lend. So what role are we playing? Can we do more? We want to have feedback also on that. So those will be the objectives of this webinar. We are CRC, like Peggy has said, we are a group of companies. We have two companies now. The credit bureau itself, which started in 2009. And just early this year, we introduced credit CRC Data and Analytics Company to also be part of our group. And what the credit bureau does is just purely credit bureau business, and I'll talk briefly about that. But what CIDA, the CRC, Data and Analytics does is to be a data company that now focus on other data and other information, especially in area of analytics. So that company will do so many other things that CRC cannot do as a credit bureau. And that all the issues that we deal with in CRC is about data, and data to get people to be informed, to be empowered, and to help them to do more with the information that they need at their disposal. We are an award-winning institution. Since 2014, we've been winning awards year in, year out. You will see that we remain the best credit bureau in Nigeria. We are the largest credit bureau in Nigeria as well. Now, what do we do? And I need to lay more emphasis on this because quite a lot of people, based on some of the webinars we have run, believe that we are a credit granting institution. CRC is not a credit granting institution. CRC do not give loans. Neither do we ask for money to be paid into any account of anybody. And I think I need to put that information out there because after last webinar, some people, some fraudsters were trying to get across to some of the participants to ask them that they can give them loans. No, CRC is just a credit bureau. We are a data collecting institution. We collect data and we process this data and we make this data available to our customers who are basically creditors and lenders. Our job is to enhance information sharing among those who are in lending or in credit business. We try to reduce the incidence of lending in the dark, and we promote information sharing among lenders and borrowers. And so our job is to shape behavior of both lenders and creditors. We are to promote responsible lending and responsible borrowing. We are to ensure that people don't lend in the dark anymore, and that they have access to credible information that will enable them to really take informed decisions and give opportunity to those who should have access to credit to have access to credit. So we affect the lives of borrowers, the life of credit grantors, and then we affect the economy generally. For borrower, we maintain accurate database of information. For credit grantors, we collect data from them, and they also have opportunity to come to our credit to our database to access information on the information of borrowers that we have. And in doing all of this, we stimulate access to credit, we grow the economy, and we grow the GDP of the economy. We have a lot of products and services, and these products and services speak to opportunity for our customers to acquire new customers. It helps them to provide customers, to look for customers, and have opportunity to see customers that they can talk to or they can lend to. And then we also then support them to be able to provide those who have applied for loans, and then also support them for them to monitor the loans once those loans have been granted, and to do risk-based pricing. So we support them in managing risk and in analyzing risks that are embedded in credit. And finally, we also help support them in collections, where loans are getting bad, or loans will go into default. We have, products and services that help them to be able to make those collections. And then some of those things are what we see here. When you get the slide, you see all the various products and services we have. We've segmented them into 4 sections. 1, to help in profiling. 2, to help in assessing the suitability of customers, whether business customer or consumer customer, for credit or for postpaid services. And then we get opportunity to you for product that assist you to monitor the credit, and of course to do collections. We have done so much in the Nigerian economy, and our impact is seen in the astronomical growth we are seeing, not volume of loan that we see in the Nigerian economy. You also can see, that the non-performing loans rates has completely come down. In 2009, when we went live, non-performing loans, NPL rate was 32% or 33% in Nigeria. Today, NPL is operating as less than 5%, in fact, below the threshold of 5% that central bank had gave to itself. So we shut down lending in the dark. We help to reduce all manner of frauds that we used to see in lending and among borrowers. We help Nigeria to advance on the ease of doing business because we are an infrastructure and an enabler that enable people to have access to credible information. And these are one of the factors that the World Bank used to score to rank countries in the ease of doing business. So we also help the regulators to strengthen supervision and to contain systemic risk. We help customers to trace customers, our lenders to trace customers that have disappeared or that may have borrowed for some years back and they could no longer trace them. So many things are things that we bring to the table. As we speak today, CRC is the largest credit bureau in Nigeria. Our customer base is around 2,000, cutting across all sectors. So our customers are not just commercial banks or microfinance banks or mortgage banks. Telcos, oil and gas, leasing companies, discos, fintech companies, the specialized financial institutions like Bank of Industry, Federal Mortgage Bank, all of those are also, customers and members of the CRC Credit Bureau. Auto dealers, courier services, all of them are there. But for the purpose of our conversation this morning, it's important for me to mention that micro-lenders on our platform currently are about 1,151. So out of our 2,000 customers, they represent more than 50%. Because bureaus that generally are meant to support small lending and lending to SMEs. So that's why they become so important as part of the infrastructure that we have put together. And as we speak today, we have over 68 million credit files at our disposal in CRC. Member institutions can, get access to our site through web or through APIs or through off channels. Whereas individuals who want to know their credit status can go to our website to have access to our customers. They can get their credit reports, they can get their credit score. They also can download our mobile app. We have what we call CRC mobile app. You can download through Android or iOS. So whichever way, whether you use whichever telephone you use, it's either powered by iOS or by Android, you can download CRC mobile app. And from there, you can then begin to see the products that you want to buy. If you want to know your credit status or you want to know your credit score, you just use that app to be able to get that. Otherwise, you can have offline channels by probably sending email to us or come to our office and so on. But that's the weakest of the opportunity you have. I think the most important thing that can make life easy for you is to go to our website or to download the CRC mobile app. Now, let's go to the business of today. In doing to the business of today, we are talking about access to credit. And we know that by the Nigeria Bureau of Statistics data, there were supposed to be 41.5 million small and medium enterprises in Nigeria. I think they brought this down to about 39 million by 2021. But it's neither here nor there. What we see is that micro businesses, which is the subject of our conversation today, is about 99.8% of all the businesses that operate in Nigeria. Small businesses represent less than 1%, in fact, less than 0.5%. So most businesses in Nigeria are micro enterprises. And you can see that about 73% of all these businesses are sole proprietorships. 6% are partnership, and only 14% are private limited liability companies. So a lot of businesses that we see that are wrong are really micro businesses, and they are just they will need micro lenders to be able to have access to credit. Now, today we're talking about micro lending, and this is just talking about making loans available to individuals and to small businesses. And these loans are small value loans, 50,000, 100,000, 1 million, 2 million, 3 million. These are loans that are normally granted without collateral. And when they are granted with collateral, the collateral requirements are not as stiff as what a normal commercial bank will request. The thing is that the micro lending space has been made popular by Grameen Bank that was founded in 1976 in Bangladesh. Since that time, there have been a significant, growth springing up of micro lending in virtually all parts of the world, especially in emerging markets and developing countries like Nigeria. So it's prevalent now. Because the Bangladesh experience started with women, you begin to see, even from Nigeria, the data in Nigeria, that micro lenders really impact female, women gender very positively in most parts of the world. So the two purposes that micro lenders serve are to help small business to have access to funds to either start or to grow their business or to run their business, maybe as working capital. But they also support those individuals and businesses who ordinarily will not be able to meet the requirement of commercial banks, either because of the amount involved or because of the terms and conditions that they may not be able to meet that commercial banks may require. But it's also important for me to say that even though micro lenders, microfinance banks are the major players in this space, it's now becoming a very competitive space for everyone. Commercial banks also now have developed models, digital loans, devices that enable them to service micro businesses, and they make money available to them. We now have the mobile network operators, we have fintech now, all of them lending to micro borrowers, as the case may be. So it has become a very competitive space, and I'm not talking about organizations like the cooperatives that we are very much used to. Now is a growing market, is a sophisticated market, is a market that is competing for customers. And this is what the micro lenders have to face as we speak today. Let me use the CRC database, and the CRC database is the largest database of all borrowings that we have in Nigeria. So I just want to give you an idea of where microlending is in Nigeria today. And this figure I'm giving to you as July this year, so it's at our last month. Now, if you look at this, the count, there are 28.3 borrowers that we have on our database, and 26.6% of them are actually for individuals, where only 1.7 million are borrowers that are commercial, that are corporate entities. Okay, but out of that, you realize that 49.6, which is about 50% of the loans that are granted in the space in lending space in Nigeria goes granted through microlenders. So the composition of subject count of customers who have taken loan in the space that we have in our database, 50% of them are granted by microlenders. And the facility, the total facility, which is about 68 million that I've mentioned before, about 50% of that is also granted by microlenders. 41% of them granted to individuals, and 2.6. So granted to them, and then about 6% is granted to corporate. So you see that in all, this space is dominated. Access to loan for consumers, for micro businesses, is dominated by microlenders. But on the flip side of it, you now realize that microlenders' value of loan is just about 22.6% of the total loans in the economy, even though about 50% or 51% of the activities 51% of micro lending goes, they occupy 51% of the space. The total loan is less than 1 trillion. It's about 943 billion out of about 37 trillion total value of loan we have now in the economy that's by July. The point I'm trying to make is that even though micro lenders reach a lot of people, when we look at the totality of people who enjoy credit, that the value of the contribution they make is less than 3%. Commercial banks value of commercial bank loans still constitutes about 75% among the total loans that we have. Now, the other issue, and I spoke to you about that, is that among those 13.2 million people who borrow from micro lenders, so about 26.6 million people that borrow from the space, from banking space generally, female constitutes about 36.8%, while male constitutes about 63%. But if you drill down this issue, you realize that for micro lenders, 70% of their customers who borrow from them are female. Only 30% are male. When you contrast that to commercial bank, as you can see on the screen, 21% of borrowers, individual borrowers from commercial bank are male, and 79%, actually 80% are male. Only 21% are female. So it's the other way around for microfinance bank. For microfinance bank, 70% of their customers, borrowing customers, are female, and only 30% are male. And I think it's important for us to see the impact that the micro lending space has given opportunity to female gender to now have access to credit. They power the resources, they power the businesses of women much more than you see for men. But they face a lot of challenges, and I'm not going to speak so much about this challenge because we have operators in the house who are going to be talking about the challenges they face. So I will just keep this slide. But I know that they have challenges with operational costs, they have challenges with government policies, they have issues around adopting technology to be able to scale, and so on and so forth like that. But this will be theoretical from my part. Those who are really on the field, who will speak to the challenges they face, are here. Dr. Kazim and Mr. Joda will speak to all of that. And of course, the representative of the central bank will speak to the policy area and some of the things that they are doing relating to also getting access to credit for micro businesses. Let me also say that we have done a lot in Nigeria to enhance access to credit, to penetrate, to grant credit to as many people as possible. But if you situate us against other countries of the world, Nigeria is still very low. We are still very small. The people who have access to credit, I told you, was 26.6 million individuals, is still low. Less than 2 million businesses have access to credit in Nigeria. When you compare that to other clients, we are very low, even though we have made some significant progress. So in Nigeria, credit bureau penetration is still 14%, and credit penetration is still 12%. So our 36 trillion, 37 trillion, vis-a-vis our GDP is just about 12%. Whereas in Kenya is 32%, in Morocco is 96%. And of course, in Malaysia is 134, which means the amount of credit in the economy of Malaysia is, the value is higher than their GDP. And that's the way it should be if we really want to, excite businesses and we want to make sure that people get out of poverty. Now, let me round up by saying that we still have a lot to do. And part of the conversation I want us to have today is to see where we are, what are we doing, but what can we still do for more people to have access to credit? What are the constraints that we see that we face as lenders, micro lenders, that make us not to be able to do much for those borrowers or potential borrowers who approach us? What else do you expect from government, from central bank to help you to be able to do all of that? And of course, for participants themselves, you want to see how else can you have opportunity to be able to get access to credit? What are the pain areas you have? And then we have operators here today who will be able to help us to digest all this information. So once again, I want to welcome all of us to this session, and it's my pleasure to moderate this session. And I want to now, step down a bit and allow the keynote speaker to speak on the theme, micro lenders and access to credit in Nigeria for small businesses and consumers. I now yield the floor to Dr. Olarewaju Kasim. Dr. Kasim, the floor is yours, please.
Okay, thank you very much, Mr. Popola. Let me try to share my screen, and then I can start. Okay, so thank you very much. I believe everyone can see my screen now. First of all, let me thank the organizers of this program, CRC, for the invitation to talk on this very important subject matter. I also recognize the presence of the various directors from the central bank, and of course, my colleague, Mr. Taiwo Joda of ASEAN Microfinance Bank. According to the expectations, there are many participants in this program, cutting across the operators, the regulators, the facilitators, and the users. We'll spend more time to talk about how the users will be able to access microcredits from the various institutions during this presentation. I will also attempt to look at various areas, the steps that have been taken so far to address the issue of credits to the various users in the system. What are the problems and challenges? And of course, I speak specifically, on Baobab, the institution that I head today. So thank you very much for everyone that is in attendance. So I start with this first introductory part. The problem of credit to MSME. MSME, by the way, is micro, small, and medium enterprises. Is the issue of accessibility, according to EFINA reports, meaning that, and which the MD of CRC has alluded to. This is one of the greatest issues that is beveling our ability to be able to become a very productive economy and society. Based on study that was conducted, 80%, and this is also based on the Bureau of Statistics, 80% of the persons employed in Nigeria are employed by the micro, small, and medium enterprises in the country. Unfortunately, also based on a study that I was a part of, 84% of MSME die before their 5th anniversary due to inadequate funding. And so that is a very sad situation. If you have a sector that employs 80%, and then 84% of such sectors, when they start, they go under within the first 5 years. Now, it's not only the issue of not even having access to credit, we have issues around underbanking, in which case the volume of the credit that is required, the size, and the variety, most of the consumers are not getting. So what you see today in the system is also a plain vanilla. So you want a credit today that will help you other than the plain vanilla that we get from most banks. They are probably not available. Things like a health credit, things like tourism, and the likes of them. Of course, the business credit is one of the ones that we know, but to also get the business going, you need to get life going. I also try to look at the demand size of credit based on a study that was also published. Immediately after COVID, it was expected that Nigeria will be needing about 156 billion credit, for which will, the annual growth rate will be about 12%. So year on year, we expect that about 12% credit will be required by credit users. This will tell us that the market is so open, and like the MD of CRC alluded, only 14% of our GDP is being contributed by way of the credit that is extended to the users. And like he has said, this is so small compared to many African countries. Now, there are issues that we have seen concerning credit. Even though we have credit that is available to a lot of persons, it is mostly concentrated in the urban areas. We also have issues among the young people not being able to access credit because they may not have the credit records to be able to support that. Some business owners that are not structured without proper record also have a lot of issues. And for the SME, you see a lot of underfunding. So even though they are getting the credits, the type and the volume and the value that they needed are not available. That leads to increase in poverty. It's not uncommon for you to hear people say Nigeria is the poverty capital of the world. And also you discover that it's even worse in the rural areas, as a lot of the credits are granted mainly in the urban areas. Again, even if you look at the fintech of this world, you discover that the credits that are granted are also to people who have some level of technology and access to internet. Now, on the whole, what we have seen is that the population is growing faster than the economy, and that is a big danger. One is not surprised at the social issues that you see around the country at the moment, coming from the fact that a lot of people are unemployed. And so one of the ways to catalyze this is to be able to extend credit to all the willing borrowers who have ventures where they can deploy this credit to be able to stimulate the economy. Okay. There are a few steps that have been taken to address this issue. Just 1 second. Sorry, I had a technical hitch from my end. So, like I was saying, you see a population that is growing a lot faster than the economy, which created a lot of issues. Nonetheless, the sector for where I belong, we've been able to support the growth of MSME in the country, and like as alluded to by the MD of CRC, to about 493 billion as at end of December 2021. Now, in this journey, we have a lot of participants in the ecosystem, which is very, very important for everyone participating to know. You have the lenders, you have the consumers, you have the regulators and the facilitators. Among the lenders are the ones that I already explained, the commercial banks of this world, the microfinance bank, the MNOs, the fintech, and all the rest. And the interest here is financial intermediation, ability to be able to move resources from the area of surplus to area of scarcity, to be able to provide credit for people who may need it in a very secure manner, and also ensuring that they are able to get the repayment. So quite well, it's an ecosystem where you have a lot of people, but you have everyone's job cut for them. Now, for the purpose of the viewer, it's also very important to know that at the moment, 3 tools are very, very significant, which is the telephone number, the BVN, and then the NIN. Now, with this, it's possible for you to be able to access credit. It's also possible for everyone to know everything about you. What we are seeing today is a data-driven economy. And like the MD of the CRC mentioned, you will see a situation where it will also almost become impossible for anyone to be able to do anything without, referring to the credit record of the people that are involved. For instance, I see a future where even when you want to rent a house, somebody can check on credit bureau to see what you are doing, whether you are indebted or whether you honor your obligation. You want to send your child to a school, it's very easy to see whether you pay the school fees by checking your credit record. You are a contractor, they want to see whether you are indebted and you are not paying your record. So it's a data-driven economy, and we're getting to the space where the kind of things that we use or we do before may not be as relevant as it used to be. For instance, people will tell you, I need the collateral to borrow. Once these data are available, and once they become very efficient, you will see a situation where a lot of transactions will be based on the analysis that is coming from the data. And so any wise borrower today will keep such a record with the credit bureau to ensure that whenever their files are caught up, that they are able to get a positive response from the lenders. And that's the position that we are getting into. And then from the consumer side, the consumer is concerned about the access, they want the varieties, they want it to be cost effective, they want it to be timely, they want a very secure channel, and they want it to be continuous, meaning sustainable every time they want the credits available to them. For the regulators, I'm happy we have the central bank here. Their own is about the policy that will ensure that the system is very sound, and then there is competition to the advantage of the consumers. You have a healthy system where we know that the system is going to be sustainable over a long time. Of course, the government is interested in tax and the levies that come from this. And of course, the regulator wants to kick out a lot of serial defaulters. That's why today you have what is called GSI, Global Standing Instruction, where if you own a bank, the bank can go after your credits in other banks and be able to recover such money, a platform that has been created by the regulators. And then to the facilitators, Mr. Pokola has spoken so much about their job as a credit bureau to facilitate access to credit, provide data, quality data that can help various participants make informed decision, and also to encourage responsible borrowing, because the records are there to be able to show over time what you have done with the previous borrowing that you have done. And of course, to be able to provide a very reliable credit record, like I've said, I see a situation where the future, most things would depend on the kind of credit record that you have. If you have a friend outside this country today, they will tell you that they want to keep their credit record intact, because this determines a whole lot of things that happen around their life. And we are getting there. It's just a matter of time. Now, as already mentioned, this is the wet pyramid and looking at access to credit. Of course, as you move up, you discover that the value of the credit that is required becomes higher, but you have less people there. That's why, when the CRC CEO was also talking, he was talking about the fact that most of the credit is happening at the level of a micro and of retail, and that's what you see on this chart. So number 1 to 3 are the focus. Before now, we used to hear that, employee, around this area or this kind of company are between 1 to 150. That's fast changing because of the issue of unemployment, where you now have very cheap labor. And again, the benchmark used to be about 50 million. Given the level of devaluation too, that is fast changing. But of course, this is where we have the critical mass, the 1 to 3. That's the micro, the retail, and the commercial. Of course, they employ over 80%. So if we want to increase the level of employment in this country or reduce unemployment, this is where the focus should be. And one of the ways, like I have said before, is to ensure that companies that start are able to sustain their growth by getting credits to be able to grow. Of course, this is the largest contributor to the economy. At the end of the day, you have many more people that are in this bracket. In fact, for the corporates of this world, what happened to them is also dependent on what happened to the first 3, because they are the consumers of goods at the end of the day. And if we need to address the social issues in this country, that is where the focus has to be. If you want to talk about issue of insurgency, you want to talk about the issue of social miscreants that we have all over the country, one of the roots is inability of people who will have gone into one form of business or the other not to be able to access credit. Of course, this is not justifying what they are doing, but again, to tackle this issue, this is one area that we have to look at. Since over 80% of the population, the working population, is employed in this area, it just means that we put emphasis here, then we reduce the issues that we see around the country today. Now, I try to also dimension the fact that there are factors that have limited the opportunity for borrowers to be able to access credit in the system. There is no doubt today, one of the biggest issue is access to credit. The consumer, if you look at the arc below, the consumer wants a proximity. This is likely addressed by the issue of technology, especially fintech, digital financial services that's available today. They want it in a timely manner. They want it, in a convenient manner, and they want the price to be okay, and of course affordable. In which case, they are able to buy the credit low and be able to make production and be able to sell and make a gain. But what do we discover? A lot of persons who intended to get credit are not able to do so today for various reasons. Some of them very simple reasons, but because they don't know, they discover that they go to so many lenders, and you hear complain about, I've been to so many places, I've spoken to so many people, I went to so many banks, I'm not able to get credit. A few of those factors are enumerated here. It is not limited to this, but this is what we see, as one of the top factors. The issue of financial record. So there is no lender who will want to provide you any big credit without looking at your financial record. So if you make sales and you don't have banking record, it becomes very difficult for anybody to just rely on your sales book. So in most cases, you have the business, you have the know-how, but you are not able to get credit because your record does not show that you've done the volume of business that you want the credit for. The second one is inadequate business knowledge and be able to demonstrate the capacity for the credit that is needed. So credit in most cases, especially for the SME, run on cash flow. Somebody wants to know how much sales are you making? What is the profit that you are going to make at the end of the day? Can you service the principal and interest? Now, you may be able to do this, but you also need to be able to demonstrate this to the lender. The other one is a poor credit habit. You discover that, like we have said, the credit bureau now provides a report on your credit. Once the report is negative, you may not even be able to go further in your credit assessment. And in most cases, it may not be because you are not willing to pay. It's just the fact that maybe a borrower is careless about making the payment, but the record goes in, and there we don't know the reason. But it is clear that you are not paying as when due. And then other lenders will look at you as a defaulter. That way, it becomes very difficult for you to get credit. I can say it for a fact, for my company, if you have a negative credit record, in which case on the credit bureau, we can see that you have not been servicing your loan, you cannot even go any further. The loan is going to be rejected there and then. And I can tell you that this is applicable to many responsible lenders that you have in the system. The other one is the issue of stable business, demonstrating the cash flow. So you may have sales, but you also need to look at looking at a loan that matches your cash flow. So are you selling every month? Then you'll be able to make your repayment every month. Are you selling every quarter and you want a loan that you can repay every month? If you do that, then you may run into some issues with the lender. So you have the capacity, but your cash flow does not match what you are asking for. And today we have, poor planning, inability to make the terms and conditions, that a borrower or a lender, has proposed to the borrower, because every credit, especially for SME, will come with some terms and conditions. If you don't get prepared, even though you can meet those conditions, if you don't get prepared, you may not meet them at the time you want the credit, and it becomes very difficult, of course, to be able to assess the credit. The other one is the issue of credit knowledge. In one of the research that I was involved in, it will surprise everyone that some people ask for credit and they never even bother to ask questions about, look, what do I require? How do I go about this? Unfortunately, too, some fragment their business. They have like 20 accounts, and they have it, all over the place. At the end of the day, when you put the business together, it looks a big business that should be able to access credit, but inability to be able to put them together by the borrower creates a whole lot of problem. Issues around the presentation. And the last one, and deliberately too, is the issue of collateral. So collateral is very important. It could come in form of social, tangible, or intangible, but that's not the most important thing. I've heard a lot of borrowers talk about the fact that they don't have collateral. I think the first is to be able to demonstrate that you are able to take the credit, and the issue of collateral can come because that's a residual factor where you have a default, where you can demonstrate that your business is able to pay the principal and the interest. The thinking of the lender will not be first the issue of collateral. The collateral is one of the last things a lender is looking at. But I know a lot of lenders think that this is one of the first things that, borrowers think this is one of the first things that a lender is looking at. Now, a few steps has been taken, and like the CRCMD, talked about. One of them is the establishment of a microfinance bank by the CBN. I'm happy that the CBN are on this call to be able to provide a platform to help Nigerians to be able to access credit, especially the micro and small enterprises. This started from 2005, and like I said, as at end of last year, there were over 493 billion that has been done by the microfinance bank across the country. So this is small, but in any case, this is one of the steps to address the issues. Where you have a 14% contribution to GDP coming from a sector, everything needs to be done to be able to help that sector. And this is one of the areas for which I think we also need to give kudos to the central bank. Now, there are focus and expectation, for anyone who wants to, access credit. The lenders look at themselves as financial intermediators. And it's also very important to know what is their thinking. And in this instance, I am looking at the microfinance subsector. So it's not only about just give people money. We have actually 3 bottom line, which a responsible lender we want to look at. And it's also important for the consumer to know that these are some of the things that dictates what happens in the credit space. Is the issue of social. So, a responsible lender will want to look at the social impact to be sure that what you are doing will be to the benefit of generality of the society, and then that is not going to infringe on anybody's right. The second one is financial, meaning that the credit will have to be done to you to ensure that there is sustainability. And that is why you discover that every lender is always aggravated when the borrower is not paying back, because it becomes unsustainable and it becomes financially bankrupt. That is the space you don't want to find yourself. And the third one, which is recent, is environment. A responsible lender will also want to see that you take care of the environment. For us in Baobab, we have 21 areas which we do not touch. We call them exclusive areas where we do not grant credit. Things like brothel, things like human trafficking, things like deforestation, and the rest. So it's not only that you get this credit, you must be able to look at these 3 areas. Of course, the credit in these sectors are also very small. They are very simple. We try also to get you this credit as quick as possible and as near to you as possible. The tenor are always short, and so even from regulatory standpoint, you have a max of about 24 months, except some exceptions. Okay, the terms are not so cumbersome, they are not so complex, they are very straightforward. And of course, for a microfinance sector, we have limitations as to what we can do. You can only grant 1% of your shareholders' fund unimpaired to individual and 5% to corporate or to group. Credits can be delivered in through various channels, through our branch network, agency network, or digital platform, or through a partner, or other lenders in partnership. Now, the CRC CEO also mentioned the fact that there are challenges, and he said he doesn't want to touch that area. Of course, there are issues around ability to be able to provide this credit, especially from the standpoint of a microfinance bank. The issue of high cost of fund, because the essence of granting this credit to a business person is for the person to be able to use it into getting production, or to be able to deliver goods and services at a profitable, in a profitable manner. Where the cost of fund is so high, like what we are also witnessing at the moment in Nigeria, it becomes very difficult. And this is one of the challenges that we have. We also have the issues of poor banking culture, religious belief, among some borrowers. It's not only that to know how to do your business, it's also to understand how to be able to manage the issue of credit. And then you see loss of confidence. We typically see is a situation where a lot of the borrowers are not also willing to even be able to have savings with such a company. Let me also say that part of the social responsibility is that as you borrow money, you are able to create savings that will take you out of poverty because they rely upon. Of course, the issue of human capital is there. The issue of corruption, where you see, multiple taxes and issues like that, are prevalent. Now, there are recent issues that, has posed a lot of challenges to ability for even the lenders to be able to perform optimally in this area. We see social and political issues. Some part of this country today, even though we had planned that we want to start our business there, it's not accessible because of social issues. You have agitations, you also have the issue of insurgency, you have kidnapping and all the rest and the rest. Which is the second factor. And then even the issue of the devaluation is making it almost impossible for users of credit to be able to get credit that can help them. The country is a consumer economy. Most of the things that we use in this country are imported. So when you see any movement on the FX, it affects so many things, whether it's the raw material, whether it's the machinery that is used, whether it's the finished goods. And so you discover that even though you may want to provide this credit, but these are factors that are not helping. Inflation is another, area that is affecting, the ability to be able to grant credit. And of course, the interest rate, which has become very severe. As we know, banks are there to create money. They don't manufacture money. The creation of money means that you should be able to take from the area of surplus, which is cheaper, and be able to deploy to people who will need it, and for them to be able to use in a manner that they will be able to make profit after using it. But this has become almost impossible, especially of recent, and that's affecting the ability to be able to extend credit to everywhere and everyone that should be getting it. We also identify a few opportunities in this area. The agric sector, which of course very important, but with less credit, coming from a lot of the micro lenders. Maybe the SME space is doing a lot more in this area, but most of the micro lenders, this is a big opportunity that we have seen that will come by way of financial inclusion and by way of rural dwellers being able to access credit. And of course, the issue of combating extreme poverty, because poverty is everybody's issue. We also see that in this area, there is an opportunity for lenders to get involved and be able to reduce the level of poverty that we have seen. I think presently the poverty level in Nigeria is more than about 91 million people. And so that creates an opportunity. So they may be poor in terms of assets, but not poor in terms of thinking and ability to be able to produce. The issue of gender is also there. I'm happy, with the fact that for our own subsector, which is microfinance bank, like the CRC CU alluded to, over 70% of the lending has been done in this area. And as I go forward, we'll see what has been done in Baobab. Clearly, the women who are getting a lot. The saying that when you lend to a woman, you have lent to the family. And when you build a woman, you have built a family. And I think, it's deliberate for microfinance bank to want to support women, across the globe. It's also important to say that there are opportunities like we have seen in the SME space for the microfinance bank to be able to contribute. In my bank, over 90% of the loan are for businesses. We only have less than 5% for consumer, which is strictly for housing loan. And this is a big opportunity for everyone that is coming into this space. Now, I want to briefly talk about the bank way ahead because
if
again,
you can just use the next 2-3 minutes.
Okay. Okay. Thank you very much. So, so while it is true that I've talked generally for Baobab, our focus is on MSME, particularly businesses. We are present in 9 African countries and in China. At the moment, we have a footprint in about 9 states in the country, and we have, of course, digital representation everywhere. Among the few things that we do is loans and advances, transfers, savings, and also insurance. There are a few things that we have done, like we have seen that the Microfinance Bank has been supporting this economy. Today, we've been able to support over 500,000 customers across the country. We've disbursed over 400 billion since inception. And at the moment, having attained the necessary capitalization from the central bank, we're looking at the future where we'll be able to help many more Nigeria. As we will see in this presentation, we are looking at being able to extend credit to at least a minimum of 1 million persons per year. Okay. I just quickly go to what we have done over time. Like I've said, when you look at the mix, most of the loans that we have granted are mostly to the business people, about 94% of them, and about 52% to women, 45% to men, and about the remaining 3% are to corporate bodies, various incorporations. We render this service or deploy our credit through our branch network, digital channels, and through agency network. We have a plan to be able to unleash as many potentials as possible for Nigerians, looking at being able to do at least minimum 75 billion in the next 5 years by way of gross loan portfolio. To be able to do that, we may need to disburse at least about 3 times that size. Overall is to ensure that we are able to tackle the issue of poverty, for access to credit, and the goal to be able to provide our customers with financial services across the country. We are here to be able to unleash everybody's potential and to ensure that we are able to turn around the fortune of this country and be able to provide as many people with employment as possible by way of extending credit to them. Thank you very much for your time, and thank you very much the organizers for this opportunity to speak to as many people as possible. I will stand by if there are things that I need to do or get involved, as this program continues. I'll be happy to do that. Thank you.
Thank you very much, Dr. Kazim. That's very brilliant. That's a very comprehensive presentation for one of the practitioners in micro-lending in Nigeria. I'm sure most of us here know about Microfinance Bank, and he's spoken a lot about so many things. I don't have time to be able to recap most of what he has said, but he talked a lot about tools that are required for people to get loans. He spoke about you need to have your BVN, you have to have your TIN, you need to have your credit history, you need to have a bank account, whether with a micro lender or with a commercial bank. You need to demonstrate that your business is credible and you can have credible resources to repay. He talks about expectations of the microfinance banks, which is part of what I've spoken to. Now, people have a lot of questions for you. At the moment, I have 96 questions already showing on my screen for just between me and you, and the other speakers have not spoken. So again, we'll address some of the concerns. But I think part of the things you should be ready to speak to later is how can people really have access when they don't have collateral? I've seen some questions around that. Someone has said that they like your 5 ladder, the ladder that shows 5, wrongs. And you have said that 3 of those wrongs we'll have to address them to be able to tackle the social problem we are having, so that because people must have access to credit. So what we recommend as policies for that. So I think you should be getting ready for all of that. Meanwhile, it's my pleasure now so you can bring down your slide now, while I call on this one of the speakers, Mr. Taiwo Joda, to speak in just 10 minutes to the conversation we are having today on the impact of microlender access to credit for small businesses and consumers. To repeat, Mr. Taiwo Joda is the MD CEO of Action Microfinance Bank. Action is a household name, so this is the man powering the very effective, impact that we are seeing from that bank. Mr. Joda, the floor is yours. 10 minutes.
Thank you very much, Dr. Popola. It's a pleasure to be here. And I also would like to say a big thank you to Dr. Olanrewaju Kazeem. He said so many brilliant things, and he stated factually some of the huge challenges we have around microlending. And I'd like to welcome my regulator, Mrs. Nkiru Asiebu. It's great to be here, and to all those who are watching us over 1,400, I'm hoping that I've gone through most of the questions, and I'm hoping that in 10 minutes, I'll be able to speak to the heart of some of the problems and the questions that have been raised. I will try as much as possible not to repeat what has been said, and also be conscious of time. So I want to do this in 7 minutes. My name again is Taiwo Joda. I'm the MD CEO Action Microfinance Bank, and I'm very delighted this morning to share my thoughts on the topic, the impact of microlenders on access to credit for consumers and MSMEs in Nigeria. I think the topic clearly for me underscores why, or the need for microfinance institutions and microfinance banks and other players in micro-lending space to continue to focus on our key mandates, and that is achieving financial inclusion. The microfinance policy regulation of December 15, 2005, which was revised in 2011, clearly gives the microfinance bank the mandate or the direction to go. And there were 3 key of them. Number 1 is increase financial inclusion rate in the country. Number 2 is to be able to improve access to financial services to those who are economically active, but who are poor, who have no access to finance to push their business. And also to pursue poverty eradication, as well as mainstream the informal microfinance subsector into the formal financial system. So we're not just to the microlenders, we're expected to grow businesses, and when they become big enough, they go into the more formal sector, like the commercial banks. So that policy established microfinance banks and microlenders to achieve these overwhelming objectives and goals. So what are we supposed to do? Give loans, give savings, facilitate payment services and other financial products, including micro insurance. And it is based on this. I have my chairman, John Fisher, popularized the saying, and he said, if you can buy, you can sell, because the demand is always there. And he said, but to buy, you need cash. And I think that sums up the real need to lend. To buy, you need cash. But if you can buy, the demand will always be there. And I see a lot of questions that has been asked today from over 97 participants is, how do I have cash to buy this thing that I need to sell in the market space. And this is the area that Axiom Microfinance Bank has played in the last 15 years, helping people to access finance, to be able to buy so that they can sell and come back for more. We're probably the only organization that focuses strictly on SMEs. We do not give individual loans. And we have stayed true to this mandate, stayed true to the very strong core values and that business philosophy and methodology over the years. Let me say a few other things, which was the direction I've given as to how we have helped MSMEs, especially in micro-lending. Today, micro-lending, when I say micro-lending, 500,000 naira and below formed about 85% of our portfolio. And above that, formed just 15%. The average loan to over 40,000 creditors, borrowers at the moment stands at 250,000 naira as an average loan. But then we've seen customers we have to give up to 10 million naira to. But this speaks to the essence of micro-lending. We've just recently moved to 250,000. Before it was about 100,000. But as we see inflation, as the exchange rate continues to go up, for businesses, we realize that they need to be able to attract a little more loan to be able to even stay at the level of businesses that they were doing before. Axiom Microfinance Bank is supported by very strong shareholders and very strong corporate governance. We have EcoBank, Zenith Bank, and Citibank as shareholders. And we have the International Finance Corporation, a subsidiary of the World Bank. And of course, Axiom International Axiom International in the United States as one of the key shareholders in Axiom Microfinance Bank. And it is with this support and strong financial backbone that has made us an undisputable leader. In 15 years, we have disbursed 203 billion naira in loans to 615,272 micro and small, medium enterprise customers. And we are very willing to expand that in the years to come. We've employed a lot of digital initiatives to make it convenient for our customers to be able to access our loans and also consummate their transactions from the comfort of their from the comfort of their homes. In the practice of the business that we do, lending to the retail businesses, we have discovered quite a number of challenges. I will highlight a few of them. And as we go into the question and answers, I'm hoping that we'll be able to address more. Some of those key challenges I'll break into 4 categories. One is the financial sector policy distortions. Dr. Popola mentioned these, and also Dr. Kazim spoke a lot about the policy distortions. Again, it's even on the parts of the micro-lenders, and that is the lack of clear understanding of the lending methodology and principles that governs the market. I popularized the saying, and I keep saying that microfinance banks are not mini banks. They are not mini commercial banks. We don't do the transaction the way commercial banks do it. We do transaction as a micro because the market segment, the market sector is totally different. The dynamics of the market is different. Like some of the questions that I asked today, which we'll be getting to later, is I do not have security. And I think that is the mandate, that's the initiative. That's why we have the credit bureaus. First and foremost is to be able to establish a customer's capacity to pay. And CRC has done very well in that regard. by providing that data to be able to see customers' credit history. And the second is to be able to de-risk and mitigate the challenges that individual borrowers may have so that they can have access to loan, even if they don't have security. We have the movable asset security that Action Microfinance Bank has adopted over 7 years ago, and even the chairs and tables in your room can be used as security. So there is that lack of clear understanding. And we see a lot of microfinance banks having an average loan of 5 million, actually leaving the micro lenders to do business that mirrors what the commercial banks should do. And I think that's where we're missing the mandate, and it's a challenge we need to look at. The third one is the information asymmetries, the lack of information, the lack of audit, the lack of data. Most of the people will deal with and have audit. They don't have audited financial statements. In fact, they don't have any records that they keep. And, you know, even where you have risk algorithms, where you have artificial intelligence to help you determine how a customer will perform, it only comes mostly after the customer either have a credit history and you're able to track the credit history, or have an account statement. But what happens when you're opening an account for a customer for the first time? A lot of things comes with having to go in there into the market, physically assess their books, have long interviews with them. And so this information also allows a turnaround time for credit to this sector of the market. And of course, on the back of that closely is the high risk in lending to SMEs. The pandemic we had in 2020 was an eye-opener that as micro lenders, we deal with micro borrowers. And because they are micro borrowers, they are at the bottom of the pyramid. They are people whose means of livelihood depends on the sales they can make in a day. There are people whose means of livelihood is dependent on the fact that market is open every day. If not, they're going to not just eat the capital, they're going to eat, not just the profit, but also the capital, because survival becomes an instinct for them. And so it becomes high risk to lend to that. And then a lot of technology, a lot of hard work, a lot of research has to go into the risking that level of the market. I mentioned financial policy discussions, and I mentioned also a big challenge with corporate governance issues, and big challenge with legal regulatory frameworks. We have issues with the weak judicial and legal system, where cases taken to court, either by the borrower or the lender, takes years to be able to resolve. And even in getting a lawyer, you imagine you have given someone 300,000 naira, and the lawyer is asking for 600,000 naira to prosecute the case. These are some of the challenges. And there have been some activities around some states, especially Lagos, to create small commercial loan courts. But then we need to be able to multiply that across the states. For example, Action Microfinance Bank have 90 outlets in 12 states of the Federation. And the characteristic of each state is totally different. Another challenge we'll probably be looking at is the transaction cost for small size loan. And so if you're working in a commercial bank, it just takes you about the same number of time to do a 5 million naira or 5 billion naira, and that it will take you to do 200,000 naira. And so use of digital technology to drive efficiency, to drive turnaround time and quick access has become very important. I want to pause. I'm a stickler to time, and I think we'll go deeper into this discussion as we progress. Thank you very much.
All right, thank you very much, Mr. Joda. You've spoke extensively to issues around policy. I like the phrase, MSMEs are not mini commercial banks. That's a very good way to look at it, because sometimes I also got worried. You have to have a head of IT, you have to have head of credit, you have to have head of risk management, you have to have all of that with limited number of customers you are dealing with. They have also spoken to the challenge of transaction costs, because all of this also go into transaction costs that make it difficult for the microlenders to thrive. But you spoke also to the other end about the records, the customers who want to take loan. And there are quite a lot of questions that have come on the platform that shows that people are complaining that they still cannot access credit. They have businesses. I saw someone who said he has 10 million. Somebody said he has LPOs and nobody's ready to fund it and all of that. And I know some of this spoke to records. Where I sit, I know your people, yourself and your other competitors, you are looking for creditable customers to lend to. So it's just who are those customers? And I think we have more time to talk about what people need to have, really, to be able to access credit from your institution and other microlenders in the economy. Thank you so much, Mr. Joda. Now, I quickly will go to the regulators before I open the floor. Mrs. Nkiru Asiegwu has been around even before we open to the public. I really want to thank her for that. Her representative, I don't know whether she's ready now to give us a few minutes of speech. That's Mr. Josiah, right?
My name is Jackson Imandi.
Jackson, I'm sorry, Mr. Jackson. Thank you so much. So just 2-3 minutes just to make your remarks. Thank you so much.
All right. As you will see, I'm not the director herself, Ms. Nkiru Asiegwu. I represent her. She's out of the country for official engagement. So she has not been, because of time differential of where she traveled to, she has not been able to be present herself. She sends her warm felicitation, and she is very, very confident that we are going to achieve the objective for which this engagement was put together. Let me start by saying that every comment, every statement I make here refers only to financial institutions, microfinance banks that are regulated by the Central Bank of Nigeria. That is my remit. I know the statements, whatever I say, does not cover anything that is outside what the Central Bank regulates. Our position in the whole setup is the objective mandate of the Central Bank is to promote a sound financial system in the country. And our engagement with microfinance banks is to ensure that they operate in a safe and sound manner and to ensure that they do not have mission drift. When we had at the beginning of the microfinance operations in Nigeria back in 2006, was a lot of them were behaving in the manner discussed by Mr. Joda. They taught themselves as small commercial banks, and it is a spillover from what we had in the community banks, because community banks essentially were small commercial banks for the purpose of rendering financial services to a community. But the philosophy changed when we introduced a microfinance bank. Thank you, Mr. Joda, for giving us a background to the establishment when the circumstances that led to establishment of microfinance bank. The target of it is essentially the economic active poor and above. That is the bottom line. Anything above is allowed, but you want to create opportunity for credit for people who otherwise will not have access to this credit because of the time-honored tradition of collateral. Because you see, banks exist because they are a mechanism for bridging and this is basic finance, bridging the deficit unit in the economy with the surplus unit. You have money that you don't need today, you take it to the bank, and the bank gives it to someone who needs it immediately. Now, when the person who needs it comes for the money, the bank should be able to give that person that money, or there's a problem. So that is why it is important. And that is why my two operators here have said from the let go that, look, you have to be sure that this money will come back. And that is when you lend, of course, there's the possibility that the money will not come back. That is, you have created a credit risk. And the credit risk can only be managed effectively if there's a high probability that the money can come back. So we must be circumspect. That is why the operators are circumspect. You see, they want to ensure that this money comes back. It's a responsibility they take seriously. And from the utterances of the two MDs that I have on board here, they are very, very concerned about the fact nobody wants to give money that will not return. If you give a lot of money that do not return, the result is losses. And when losses accumulate, they erode your capital. And you must keep a certain level of capital for you to be in business. Even if central bank is not going to come after you to take away your license, but you must have a certain level of capital for you to sustain your business. So capital is important. And the way to preserve the capital is more capital or through profits, where you retain as part of your profit. And of course, we have the statutory retention of profit, depending on your level of profitability. You have to keep aside between 12.5% to 25%, etc., etc. They're there in the guidelines. But let me go back a little bit to Dr. Popola. I was quite happy with what he has said, but again, of course, a little bit, well, let's say, not. I won't say selfish because he's selling his own product, but I'll just say that CRC is not the only credit bureau in the market. We have licensed 3 so far, and they're doing essentially the same business. And it is active. What it's doing is to de-risk the financial landscape. And it has done quite a good job. All of them have done quite a good job. I have the pleasure of visiting microfinance banks, other financial institutions, and sitting with the staff, and they're telling me that somebody that was impossible to recover, a credit that was impossible to recover, the person on his own came back to pay. He did not just repent. He did not become a born-again Christian or born-again Muslim. The fact is he has gone for money somewhere and he has been denied the opportunity of benefiting from that credit because in the records, there is an indebtedness that he has not cleared. So he has to come back to the initial people he has taken money from to pay so that he will qualify for loan in another institution. So I want anybody that is looking for opportunity to come into the financial sector because he wants to take advantage and become a bad debtor, that it is not going to happen in the new dispensation. You will get away with the one that you started, but you won't get to another institution because the regulation says that if you have not cleared a loan with anybody which has been reported to the credit bureau, you cannot get on that. I remember that reporting to the credit bureau is by regulation. It's not optional for financial institutions. It is obligatory that they must report, and if they don't do it, there's a small sanction that the CBN exerts on so that they discourage bad behavior. So beware of that, that if you're coming in, and I believe there's a lot of young people here who have prospects, and if you have any problem with your lending, you must engage with the institution so that you see how you can work out the possibility of maybe restructuring and give you the time, the breathing space you need and come into business. It is not nice when you hear things like high percentage of small businesses are going under in the first 5 years of operation. So sometimes the institutions need to have sympathy, and they do have sympathy. If genuinely you have difficulty, they'll be able to make arrangements that will see you be able to get out of the difficulty, hopefully. The data are quite heartwarming. We have seen tremendous growth in lending. In fact, even the COVID phenomena did not slow down lending. Interestingly, across the board, in 2020, lending was still good. We hope that was not just lending for consumption, but for business. But because what really happened is that the businesses that were done in the open, they became businesses that were done indoors and all of that. So people adapted to new methodology of delivering services and products to their customers. Yes, contribution by microfinance has been heartwarming. We hope that it will will move to the trillion naira level in a very short time. I think we're about halfway towards the trillion naira, because one of the things we hear some people say all the loans they're given is very small, and I think it is a lack of appreciation of the impact. Even if the quantum, when you put it together, is not large, but the impact is far-reaching. That is the truth about it. I remember most of the big businesses you hear about today, and if you're a student of business and read the history of say Microsoft, Mark and Spencer's, and all, they started very, very small. So, and that's why we think that this is an incubator for future great businesses, and that is what we want to achieve by the direction the microfinance banks are moving. So, quite encouraging benefits. Then let me just say to you that I think I've given 3 minutes and I think I've exhausted it, but let me just give me a few more and I'll be done. One thing you're going to look at is the future. Where are we going into the future of business? The last couple of years, especially in Nigeria, we've had fintechs coming into the market space. On a personal level, I ask myself, what is fintech with regards to micro lending? Is it a technology company that wants to lend, or is it a microfinance bank that wants to deploy technology to achieve the same objective of what it has been doing over the years? And the answer is both. We have to be conscious of this. We have to be conscious of the direction this is taking. The future is for the youths. Our demography favors us greatly, and this is called the netizens or something like that. So the established microfinance banks, like the ones that have the MDs here, I'm sure are beginning to think in that direction, how they can take position, how they can leverage on this technology, and how they can reach as much a large number of young people, that's brilliant young people that are looking into different businesses that they're going to do, so that they can brighten their own their future, and of course the future of the country. And that is saying, we're talking about those that are not already on the queue to Canada, Australia, and the other parts of the country. So it's a great future we have. It's a bright future, and people like you should take advantage of the opportunity, and the financial institutions are prepared to partner with you to achieve this great dream, the Nigerian dream that we have on our own. So I'll pause here until I'm called upon to make further comments. And if there are questions that are directly relating to Central Bank, my colleague or I will be glad to talk further. Thank you very much.
Thank you so much, Mr. Jackson. Thank you so much for the insight from the perspective of the regulator. Thank you for reminding us again about what should be the focus of microlenders, to focus on the economically active poor. Also to remind them about the competitiveness that is coming to the market. Actually, that's one of the objectives of this session, to see what's the future looking like. And I like the optimism you brought for all of us, that the future is really very bright. Thank you so much. And that the CBN is ready to continue to partner to ensure that this space becomes as competitive and is as, there are a lot of improvement that are required, and the support that they need, they will continue to get it from the central bank. So I now go quickly to Mrs. Jennifer Ogboli, representing the Director of Development Finance, to also give us 2 or 3 minutes of a message. Thank you. You have to unmute. Thank you so much.
All right. Thank you so much. Thank you for this opportunity. Can you hear me?
We can hear you very well. We can hear you very well.
Okay, thank you so much. The CRS team, distinguished guests, ladies and gentlemen, good morning. I bring you good greetings from the Director, Development Finance Department, Mr. Yila Yusuf, who desired to be at this event today, but is unavoidably absent due to exigencies of duty. We count this a very great pleasure and delight to be here today and to be a part of this impactful event tagged Impact of Microlenders on Access to Credit for Consumers and MSMEs. You will all agree with me that the MSMEs subsector has over time proven to be a significant contributor to a nation's economic growth. And just like the other speakers who earlier addressed us spoke, you know, the SMEs have contributed about 48% of our national GDP in the last few years. And today we have about 37 million or a little above 37 million SMEs in Nigeria, and 80% of this contributes to total employment that we have. So it's such a great delight to have this opportunity where we can share views, you know, with participants. People can get informed, so we can see how to grow our economy together. Irrespective of the key roles that the SMEs play in the economy, we'll all agree that there are quite a number of factors that affect the growth and sustainability of the MSMEs in Nigeria, amongst which one of the major challenges is the access to finance, access to credit. And over the years, the CBN have established structured lending to the real sector of the economy through provision of the long-term, low-cost financing for entrepreneurs in a bid to stimulate the economy and act as a catalyst for economic development through its development finance interventions that are targeted at the MSMEs. We've had different interventions over time, like we had the MSMEDF, that's the Micro, Small, and Medium Enterprises Development Fund, which was established sometime in 2014 to see how to get or to reach out to the grassroots, you know, and just be able to reach out to them and see how we could just grow small businesses. You know, over the time we've had where the lending have been really the medium enterprises, but this was established so we could just reach out to the micro enterprises. And over time, we've had over 200,000 beneficiaries that have benefited, yes, from the MSMEDF. And just like my colleague talked about earlier, he said the COVID did not bring an end to lending. Yeah, so the CBN too introduced or established the Targeted Credit Facility, which is a TCF. And I know that amongst us here, there are some who benefited or who have family and friends who benefited, both the households and the MSMEs. We also have the AXMEs. The AXMEs, of course, is in collaboration with the Bankers Committee. Of course, we all know that it's the 5% profit after tax that the banks contribute, you know, in a pool of funds, see how we could reach out to micro enterprises. And so far, we've had over 40,000 beneficiaries for the AXMEs. You know, we had a cap of about, I think, 10 million, yes, for the loan limit, but just to be able to reach out to a lot of people, it was brought down to 3 million. So you see, instead of reaching just one person with 10 million, we can reach out to three persons with that same amount. And then we also have, there was also an intervention that was launched sometime in November last year. It's called the TIES, Tertiary Institutions Entrepreneurship Scheme. And this is actually specific to our graduates, you know, for graduates who have left school not more than 7 years, yes, have an opportunity to access credit. You know, many of them come out of school and they are there with their brilliant ideas, with their bright ideas, creative ideas, and because they don't have funds to drive these ideas, they are not able to really bring about their dreams coming true. But the central bank established just to be able to help our youths, to help our graduates, and we have a paradigm shift from this white-collar jobs mentality to great entrepreneurs that they can be. We launched the TIES, the Tertiary Institution Entrepreneurial scheme so that our graduates can have this opportunity to have access to credit and to be the best that they can be. For the targeted credit facility, like I talked about earlier, we had been able to reach about over 800,000 beneficiaries. And I know that we may not be able to do everything or reach out to everyone, but at least the little that we're able to do is making great impact on lives of people and lives of families. And so at this point, we would really like to appreciate and commend the CRS team for this sustained corporate social responsibility initiatives. I mean, organizing such free trainings and workshops like this to educate Nigerians generally on the issues of credit, as well as the impact it is in their financial life, is really, really commendable. And we really want to thank you. We cannot overemphasize the fact that access to finance and credit plays such a significant role in sustaining our livelihoods and developing micro enterprises. But we are very much aware that the lack of access to this credit, it hinders development. And although the truth is that lending to micro enterprises is really a high risky venture, but we would like to assure us, the participants and Nigerians, that the CBN will continue to intensify its efforts through its structured lending to provide access to credit, because we know that the micro enterprises play a major role in our economy. So I'd like to urge all participants today to give their undivided attention, to the information that will be passed across to you today. Once again, we just want to say thank you for this opportunity and a good job done to CRS team. Thank you so much.
Thank you so much. We are CRC team. Thank you so much.
Thank you.
This is Abuli for
you.
Your representation and for all the information. So those of us who are participants on the platform, she has given us additional information on the intervention forms. And I think we should take advantage of that. Talk about ACMEs that has now been brought to 3 million maximum from 10 million. And then the young graduates who are looking for how to start. If you have graduated not later than 7 years ago, you still have that opportunity to access those forms. And luckily, I think this morning I heard from channels that you are still on single digit for most of these facilities.
Yes.
It was reduced to 5% during COVID.
Yes.
I think it's gone to 9% now. So 9% is still single digit. And
Yes.
so it's still very, so a lot of funds are still there for those who want to go through government support intervention. Thank you so much, Ms. Zabuli.
Thank you.
Now, so we have just about 12 minutes to go, and I have more than 100 questions. So I'm not going to attempt to answer the questions. I'll just throw one question for Mr. Joda and Dr. Kazim in particular. I'm sure they have read through a lot of the questions by themselves. Just use 2 or 3 minutes to answer to specific, the one that you consider to be very important. For instance, one of the challenges that people have talked about is your cost of funds, the charges by microlenders. Why is it so high, and what can be done to assist them? That question, I think Mr. Joda can help. Then Mr. Dr. Kazim, so small businesses, they are still complaining that they can't still access your loan. What can we do to get them to be able to access credit? Luckily, you talked to the 5 rungs, and you said we need to focus on the bottom of the pyramid. If they have access to credit and they can do businesses, that will take a lot of them out of the street and out of trouble. So what else, what more do you need from them so that they can take advantage of this? If you are able to do that, maybe one question for Mr. Jackson, and then I will just round up for the day. I don't want us to exceed 12 o'clock. If we exceed no more than 5 minutes. So first, Mr. Jordan.
Thank you very much, Dr. Popola. Yes, indeed, there are several questions. I will suggest that even questions we cannot take, you may want to sent to us, and then we give answers, and you can circulate to the viewers and those who are attending. It's important that they get answers to most of the questions. Now, the questions of the cost of fund. I'll first say number one, micro-lending is a generic word for a lot of institutions that give loans to small business enterprises. Some of these institutions are not regulated. And so you can have varying huge pricing, from some charging up to 30%, 14% flat, 10% flat. But for microfinance bank, number one, we're regulated, though there is no ceiling on lending, but the lending pricing or loan pricing at microfinance banks are much more moderated than other microlenders. It is considered high for a few reasons, even at that level. The first is the transaction cost. Like I mentioned in my presentation, and I must have hinted, that the cost of doing a ₦1 million loan, the cost of doing 500,000 naira loan is probably also the cost of doing a ₦1 billion loan. And that's number one. Number two, most borrowers see the microfinance bank as a lending institution and not a bank. So they don't give deposits to microfinance bank. We still have that issue. And they take loan. And I've had instances where I have to educate a lot of customers that microfinance bank are also deposit money banks. They take deposits. You can keep your deposit there, because if they are able to draw like deposits, then their cost of funding will come down, and the ability to give you loan at a lesser price will also come down, will come lower. Dr. Popola mentioned a bit of regulation too, and a bit of need for the regulators, where they said that the microfinance bank, as small as they are, must maintain some high-level profile of staffing, just like the banks, which brings cost very high. So two things. Number one, I will encourage borrowers to also save with microfinance bank, because if you save with microfinance bank, it helps them to bring their costs lower. If you don't do that, they have to go to banks to borrow, or some other developmental institution to borrow, to be able to on-lend to you. Number two is the fact that because of the small amount of loan that is given, the transaction cost, the cost of processing is very high, and it makes it higher than the average bank loan that you take. And the last is, from the regulatory perspective, if we're able to manage the staffing requirement, the mandatory staffing requirement, then the overhead will come down, and then that will reflect in how we lend and at the price we lend to our customers. Thank you.
Thank you very much. Thank you very much. So Dr. Kazim.
So thank you very much once again for this opportunity. I think the issue you raise is concerning small business owners and opportunity, or the access to finance. What can they do? First of all, let me say that you have a lot of institutions that are willing to support credits, and Baobab is one of them. I will speak specifically for what you can do. One is for you to look at the kind of cash flow that you have, and be able to approach the bank to request for a loan. There are various products that you see, in the bank, and then you just need to look at the one that is suitable for you. We have people we call portfolio managers that goes around to talk to business owners. They will propose to you the kind of product that is suitable for your business, and they will take into consideration your social life, your economic life, to be able to make a proposal to you And then you just need to follow the guideline, that is required. Again, I think technology has made it very simple. Today, we have platform where you can easily request for a credit. Some of the conditions are there. We have for small loan, which we call, our TACA loan. We have for ALIP, which is for SME loan, where you can see the details of what is required for you to be able to get loan. I hear the issue around the issue of collateral. Yes, it is a real issue, but this may be for the SME business owners. If you want a micro loan, there are various ways you can approach this. One of it is for you to look at your social, status. Get into a group of persons that you can come together and be able to offer your social collateral, in which case you can get a loan together as a group. Your group will be able to guarantee that loan, and then the credit is extended to you. You can also access credit even by the little asset that you have on the National Collateral Registry. Like my colleague said, movable asset, your television, your chairs, your table, this you can pledge to easily get a credit from the bank. But above all, is for you to be able to demonstrate your capacities to be able to pay back the principal and the interest, and of course, having a very good credit record. I think these are the basic things for you to be able to, enjoy a credit. And of course, you can walk to any of our branches or check on our website, the places where you can get this credit. And this is available. I mean, this is the way we've been able to support over 500,000 persons in the last 12 years. So there is no discrimination. I can give examples. Woman, Amina in Kaduna, who was just putting together tables and chair, starting with about 50,000 today, is doing well over 40 million in terms of the credit. So, I mean, you can start small from where you are, put together what you have, approach the bank, and then you begin to grow over time. Once you are able to pay back, ability to access a higher loan for you to expand your business become a lot easier, even for the graduate. We have a graduate in Kaduna too, who is into aluminum profiling. He, by his own testimony, when he came out, he had only 100,000 naira, and he was able to construct a small table, a small window that he put in front of his house. The first person came and, asked him whether he could help him. Of course, he approached the bank, showed what he can do, got the, the order from the person, got the first loan. As at the time we were having our staff customer forum in Kaduna, he gave a testimony that he has built his second house after about 3 years. So there is no excuse like you have just graduated, you don't have assets, You need to have what we call the seed capital, which is yourself and your little savings into the business. And I'm sure you can get going from there. Thank you very much.
Thank you very much. Thank you very much. I have 2 minutes, but I may have to attend to 12:05 because I want the central bank between Mr. Jackson or Mrs. Jennifer Aguli to answer the question relating to micro lenders who are not licensed, fintechs who are not licensed, and they are harassing people with all manner of text messages and all manner of things. Is there any role the central bank can do to curb this, way of booking loan and recoveries that is very challenging for people? Very briefly, please.
I hope I just answer that quickly and also exploit the opportunity to just say a few things that I think that are really bit important so that we can be richer for this meeting. The central bank regulates institutions. If an institution is not regulated by the central bank, there's no law that says someone cannot lend money to you. I'm sure everyone here has lent money to their friend or relation at certain points in their lives, but you cannot take deposit from the public. That said, we try as much as possible when it comes to like wonder banks that people cannot differentiate between them and our licensed bank. We try as much as possible to take necessary action in conjunction with law enforcement agencies, because we don't want them to give a bad name to, because some people cannot differentiate between them or microfinance banks or other institutions that we lend. So it is a continuous activity. When we identify them, we go after them or make sure they are closed, and the law enforcement agencies prosecute them. So that is the much I can say about that. So quickly, let me just say a few things in addition to that. Yes, microfinance banks are banks, and what banks do at the very bottom basic is they take deposits and they grant loan. If they are good enough to give you deposit, they should be good enough for you to keep your money there. So please, it is important that we realize this is something that should be done. And Mr. Joda already said how this can help us to bring down the cost of lending, because we can get cheaper funds from savings. And remember that when you keep your money in a microfinance bank, the deposits are insured by the Nigerian Deposit Insurance Corporation, just like your deposit in commercial banks. So that insurance covers microfinance bank as well. Maybe in future events, you may invite NDIC to take a seat and further elaborate on this. So a huge part of your deposit, especially for small savers, is saved in the microfinance banks that we have established. And we have been accused of making the operation of microfinance bank to be expensive because of the staffing requirements, specialists here and there. But this, we are conscious of that, and we deliberately allow smaller microfinance banks to merge some of these functions. For instance, we want a compliance officer and maybe a risk management officer. The function can be on one person instead of two persons. But if your bank is large at the national level, we think you can afford it, then we insist that perhaps these functions be handled by different staff. But for the smaller institution, if you can make a case that you will not be able to accommodate those things, you can merge the functions. I want also to say that credit guarantee has come, SME credit guarantee. The central bank has licensed a credit guarantee company. So the risk again now is shared between microfinance banks and the credit guarantee company. So this is going to have to make people that otherwise will not be able to access certain loans to access them, the SMEs especially, because they have to leverage on the credit guarantee that is now in the financial landscape. Of course, pricing is going to be high, and this time I'm defending microfinance banks because credit should be risk-based. If you're someone who have borrowed before, you have not paid back, and your name is there, or you gave the institutions problem, they reported to Dr. Popola and it's his record, then your credit is going to be maybe more expensive than someone whenever he borrows, he pays promptly and he doesn't have problem in the market. Collateral helps, etc., etc. Then, of course, I hope that with Dr. Popola going forward, individuals are going to have credit scores so that when they go to institutions, that will help to reduce the cost at which they get credit, because I think that is the practice around developers. So thank you.
Thank you so much, Mr. Jackson. Thank you so much for your contribution. Yeah, so I mean, currently we have credit scores for everyone that we have data in the credit bureau. So those 26.6 million people I spoke about, all of them have credit scores. So, and I think it's good we are talking about this now, for microlenders to begin to also migrate to adoption of credit scoring products of the credit bureau, because that makes it easy. It makes life easy for them. It makes them to be able to do thousands of transactions every day. It makes them to depersonalize analysis of credit, because the risk element will have put them in buckets. So somebody who has 800 is different from somebody who has 300. So it's easy for you to say, we are lending to this, we are not lending to that. Thank you so much. I want to round up now. It's already 12:03. We have exceeded. I will round up by some comments, and I will ask Peggy to help us thank our speakers. Before I do that, it's important for me to mention some of the questions relating to the bureau. Somebody spoke about insider-related, credit by a lot of directors of microfinancial institutions. So it's left for you, if you serve on the board of any microfinance bank, to ensure that all their data is reported to the credit bureaus. It's mandatory for all licensed bureau, MLBs to use the bureau, but it's also compulsory that they must submit all data. It's also compulsory that they must also, access data of whoever they want to grant credit to before they lend. And if such person already have bad credit somewhere else, or even with the institution, of course, they should not lend to them. And I know regulators, when they go around, they check for some of these things to ensure that financial institutions, especially microfinance bank, actually use the service of credit bureau before they grant credit. The second issue is that sometimes some people ask about micro lenders who want to join the credit bureau. Yes, you are free once you are a registered company. Once you are an incorporated company, you can join credit bureau. You can submit data. You can access the data to profile your customers. All what you need to get across to us, go to our website. You see how you can the requirements for you to get to become customer. There are quite a lot of institutions that are not, regulated by central bank, who are lenders, just like Mr. Jackson said, who are also members of the credit bureau. They submit data to credit bureau. They access credit bureau information before they lend. Some of them do digitally. A lot of them do digitally. And finally, I want to appeal to all microfinance banks that are here that we want you to migrate to usage of API so that you can be lending seamlessly. You also can be submitting data seamlessly. We have API for you to extract data, which you can put directly to your lending process. We also have API for you to submit your data. You can even submit data every day if you want to submit data every day. You don't need to wait to once in a month. Once in a month is statutory. But quite a lot of institutions are now doing data submission, more regularly than once in a month, because you grant loans to some people that have to be made good within 30 days. And so those kind of loans can go in and out without being detected by the credit bureau system. And that's why it's encouraged to do that. Some people also mentioned the issue of their data are not updated. They have wrong BVN registered against them. All of those are internal things that if you are someone who has taken a loan and it's wrong information that is your credit bureau, credit report, you should report to your bank, or you should report to us. We will take it up on behalf of you to ensure that institutions that are responsible for that clean it up, and you have a very good, good credit record and credit score. Thank you so much. Again, let me just leave the floor for Peggy to round up the conversation for today. I'm really very excited. Mr. Joda, thank you so much. Dr. Kazim, thank you so much. Mrs. Agboli, thank you so much. Mr. Jackson, it's really nice to have all of you this morning. We can't finish this conversation. It's been very interesting, but I think a lot of information we have thrown out there, both to all stakeholders, SMEs, consumers, regulators, and even institutions and NGOs and so on and so forth. So Peggy, please, let's round up.
Thank you very much, sir. I want to believe, and I am sure that we've had a wonderful day today. It has been a very impactful session. Thank you, sir, for giving me the opportunity to thank everyone here today. We especially thank Mr. Yila Yusuf, the Director, Development Finance Department of the Central Bank of Nigeria. We thank Mrs. Nkiru Asiegbu, Director of Other Financial Institutions Department of the Central Bank of Nigeria. We thank Mr. Jackson and Mrs. Agboli for doing a wonderful job representing the two directors. We thank Dr. Kazim for his presentation and the wonderful insights that he has given us today. We thank Mr. Joda as well. Today would not have been complete without all the information that you've also given us. Sir, Dr. Popola, thank you very much for being our host and moderator for today. It would not be complete without me also thanking our wonderful, valued participants. You have been awesome. Altogether, we have 327 questions. We will ensure that you receive responses to these questions. We also have questions on Facebook and YouTube because we're also streaming live. And we will also take those questions and provide answers as well. Finally, I'd like to thank my colleagues who are also the organizers of this program. I'd like to thank Mrs. Karim especially, and I'd also like to thank Sike especially as well as all CRC team members. Thank you very much for being with us. We look forward to having you at our next webinar, UN Credit 9.0. Have a wonderful afternoon. Thank you.
Thank you very much. Thank you.
Thank you very much. Thanks for the opportunity.
Thank you very much.
Thank you very much. Thank you for the opportunity.
Thank you very much.
Thank you.
Bye-bye.
Thank you so much.
God,